Hello, buenos dias, buenas tardes, buenas noches, good evening. I don't know when you're watching this or listening to it, but greetings. Thank you so much for tuning in to Business 123 Introduction to Investments at Southwestern College for Fall 2025. My name is Frank Payano, and I introduce myself elsewhere, so check that out. All of us at Southwestern are incredibly honored, grateful, proud, and happy you're here with us. Whether you're in the class or just following along as a visitor, you are all welcome, and we're going to do our best to make this the best class you've ever taken. I know it's a little over the top, but it is sincere. In this presentation, we will define what is an investment. And take a look at some of the attributes, the aspects of investments. Now, this class for me is a bit unusual because we're teaching this face to face. Usually, I teach online. I'm part time now. I've retired from full time teaching, but this semester I was lucky enough to score a face to face class. So I will see you students in class. Lord willing, and the tech don't crash, we will also live stream the classes and record them. So if you miss a class or if you can't make it to the campus, no problem. Or if you're following along as a visitor, please, you're more than welcome. Stop by online at the you'll see the link on wonderprofessor.com for the class sessions. It's actually wonderprofessor.com/Zoom, all lowercase. And the class website is wonderprofessor.com/123. And you'll, since you found this, if you visitors, you're going to find all that stuff too. So let's get started on slide number 2 with a perspective. It is a gloomy moment in history. Never has the future seemed so dark and incalculable. The United States is beset with racial, industrial, and commercial chaos drifting we know not where. Of our troubles, no one can see the end. Did you see this on Skunk News last night? Weasel News? Badger News? Yeah, Fox News. Oh, yeah, right. No, when do you think this was written? When do you think this was said? When you ask people that, they often will say World War II, Great Depression, maybe 9/11. It's actually Harper's Magazine, 1847. Yeah. Almost 200 years ago. Did the new country at the time, have serious issues, serious problems at that time? Yes, they did. The country was about to tear itself apart over the peculiar institution. Yes, don't call it slavery. Call it the peculiar institution. Do we have serious issues now? Yes, the country's about to tear itself apart with a police state rising and a police entity called ICE that has now a budget greater than the Marines. But so far equating serious issues with fatal issues has been incorrect. Now we'll see over the next few years what happens. But democracy is at risk, no doubt. But that's always the case. We always have to be vigilant. And what we're going to find is that economically, technologically, things have gotten better and better and better, and probably will continue to get better with certain issues that are raised by the fact that we've changed the world. So we'll create new problems at the same time we fix old problems. But I'm very optimistic economically. From an investor standpoint, I'm very optimistic. The technologies coming down the pike are just unbelievable. I'm very worried politically, but that's a different class. Go talk to your poli-sci professor, okay? So we are going to emphasize the positive. And it turns out that optimistic, positive people tend to be more financially prosperous. Yes, indeed. And so, we'll see. The future is the future. We don't know, but I'm very optimistic. And I'm old. Usually when people get old, they get very pessimistic about the future. I'm very optimistic about the future. And so let's start our journey, and we're going to do our best to make you rich. And we're going to do our best to help you build substantial, I use the word substantial wealth over your working career. And who knows, this class might be the beginning of a career for you, because the financial industry needs more people. There's a bunch of us old guys ready to retire or die, and we need new professionals. We need more women. We need more bilingual, more minorities. They absolutely love veterans. It has nothing to do with DUI or DEI or whatever. It has to do with the fact that the world is very multicultural, and the businesses need to be. I mean, for example, if you live here in San Diego, you know that if you have a business in the South Bay, like an insurance or a bank or whatever, and you brokerage firm, and you don't have somebody who speaks Spanish, you're losing business. If you're out in our East County and you don't have somebody who speaks Arabic, you're losing business. It has nothing to do with, touchy-feely stuff. No, it's business. So, slide number 3. Chapter number 1, our introduction, overview, and the eternal struggle of risk versus return. Now, this first quote is, in fact, a friend of mine said, you should have named your book, Do You Want to Eat Well or Do You Want to Sleep Well? Because this guy, J. Kenforth Morley, back in the late 1800s, said it best. In investing money, the amount of interest you want should depend upon whether you want to eat well or sleep well. Now, I would, if I would be so bold, I would change the word interest to reward, or return, because interest is just one thing we get from a type of investing. It's one reward we get from a type of investing, but there are other rewards that we get from other types of investing. But still, the meaning is perfect. Do you want to eat well or do you want to sleep well? Because it turns out you can't get both. Sorry, it just doesn't happen. Now, what we're going to do is we're going to learn some techniques that should help us eat reasonably well and sleep reasonably well. Yeah, that's the idea. Now, once we leave the confines of a bank or a credit union where our investment is guaranteed by the full faith and credit of the federal government, yeah, there's going to be times when we're going to lose money, but that's okay. That's all right, as we'll see. So stick with us. Do you want to eat well or do you want to sleep well? And we hope that you're going to want to eat reasonably well and sleep reasonably well. And with regard to how you do that, it can be boiled down into 3 words, thanks to Michael Gitlin, the president and CEO of the Capital Group, one of the largest money managers in the world out there. But he said it really very succinctly. Invest, don't trade. Right. Exactly. Do you want to be an investor or do you want to be a trader? Trader, a speculator. And if you want to be an investor, we can help you. Definitely, we're here to help you. We believe that the techniques, the information you learn intellectually, and the techniques intellectually, and the techniques emotionally will help you be a successful long-term investor, assuming the world doesn't end. If you want to be a trader, well, we'll do our best, but we can't really help you. No, I certainly am not a trader, Trader. No. So remember, invest, don't trade. Slide number 4. What is an investment? Well, there are, various definitions. This is the one we're going to use. An investment is any vehicle into which resources can be placed with the expectation that it will generate positive income or that its value will be preserved or increased or both. So you see that investment is italics. Whenever you see something italics in the presentation, that usually means it's going to be a test question. Yeah. Now, in other words, we're trying to make money. We want to generate positive income, or we want to increase the value, or both. The second definition we have here is by a gentleman by the name of Benjamin Graham, who was Warren Buffett's, the famed investor Warren Buffett's teacher, and wrote the definitive book, which we'll take a look at later on, called The Intelligent Investor. Don't run out and get that book yet. Don't wait. There's a couple other books you want to read before that, including the textbook that we have. But eventually, every intelligent investor wants to read The Intelligent Investor. Now, this definition we're going to come back to over and over again. An investment operation is one which, upon thorough analysis, promises safety of principal and a satisfactory return. Operations not meeting these requirements are speculative. So we're going to do our best to differentiate between long-term prudent investments and short-term speculative trades or speculations. Investment rewards, investment returns come in various different flavors. As we said, interest is just one of them. But also we can receive dividends from stocks or rent from real estate investments. Those are called cash flows or inflows or cash flows. And of course, what most people, when they think of investments, think of are the capital gains, the increased value, the capital appreciation. Yippee! Ha ha! But often, if we just concentrate on the capital gains and try to maximize them, we sometimes will have to deal with capital losses. Boo. Yeah, okay. Because investments come in all shapes, flavors, and sizes. Here on slide 5 are the 3 major types of investments. Securities. Securities? I'm not an administration of justice major. No, not that type of security. No. Securities is an unfortunate word. I like to call them financial investments. These are investments that represent debt or ownership or the legal right to acquire or sell an ownership and interest. What's up? This is a silly, I don't understand what this means. Well, what we're saying here is that these securities are financial investments that allow us to either lay claim on a loan, debt, or a business or other enterprise ownership, or there's a tricky way where you can sort of say, well, I'm thinking about buying this thing, but I'm not quite sure yet. They're kind of scary, and we'll talk about those later. So just think financial investments. Now, securities can be traded. That's one of the cool things about securities. And many people hear about how many stocks were traded in any one day. Yeah, because stocks are a form of security. The other side of the coin are property, real estate. Real estate is a fancy term for anything that's either land or attached to the land. Land, buildings. Personal property, such as cars, precious metals, art collectibles. We call these hard assets, tangible assets. And then later on, we'll learn how we can actually buy and sell commodities without actually buying or selling commodities like wheat or corn or oil. And then the third type of investment is for personal investment. The third type of investment is personal investments. And you're doing that right now. By taking this class, you are investing in yourself. And none other than Benjamin Franklin said an investment in oneself pays the best dividends. And so education, training, college is often the best investment a person will ever make. Why is that case? Well, people will say you're going to increase your earning power, and that's certainly true. People who have college degrees typically earn more than people without college degrees. But I try to emphasize to people that the reason you go to college is to broaden your horizons, to make you a more well-rounded person. It stopped again. I don't know why this is happening, but every once in a while the closed captioning stopped. My apologies. So I'm not going to, I've done this a few times to start it over, and it gets very frustrating, but for some reason I'm losing the closed captioning. But then turn on the closed captioning with YouTube, and you will go to YouTube, and you'll see the closed captioning will appear from YouTube automatically. It's the same company, it's Google, but I don't know why it stops. I apologize. Poop. I'm going to stop this and see if I can start it again and see what happens. Hang on a minute. Okay, the closed captioning has not started again. My apologies. So here we are. No more closed captioning, but at least you'll be able to see it in YouTube. So you have to go to YouTube if you're on wonderprofessor.com. So college is a very good investment, in my humble opinion, and we're going to hopefully interest you in at least considering a career in the investment services world, the financial services world. It is immense, and there's tremendous opportunities, folks. Tremendous opportunities. Oops. Did we mention the salaries are higher than the national averages? I hope so. Okay. Slide number 6. Primary assets versus derivative assets. Oh, by the way, there's a study guide, and you might want to stop the presentation, print out that study guide, and make notes as you're going through the presentation, because all these aspects about investments are fair game. They'll be on the exam, and you really need to learn about them. One of the things I forgot to mention about, I usually mention this at the very beginning, is this class is not that hard. It really is not that hard. The calculations are very simple. Wait till you see them. You'll say, oh, this is easy. I can do this. It's the words that get in the way. It's all the material that you have to learn. And it's intellectually straightforward, but you got to do it. You got to put the time in. And so get that study guide out and study these terms. Now, assets, investments are also be categorized in the different types of assets, whether they're primary assets or derivative assets. Well, primary assets are broken down into 2 different types. Debt, where you loan money to somebody. Those are bonds. It's like mortgage. Funds lent in exchange for interest income and the promised repayment of the loan at a given future date. Those are debt assets. Whereas equity means ownership, means you're actually part owner, or you are the owner of the business or the property. Stocks represent ownership in a corporation, in a business. Partnerships, sole proprietorships. You might have taken Business 120, Introduction to Business, and learned about these, or Business 140, or business law class. Real estate. You could be owner of real estate, or you can participate in a huge real estate venture through what are called real estate investment trusts. They're kind of like stocks, very similar. But instead of investing in a business, they're investing in warehouses or shopping centers or apartment buildings or office buildings. Now, this second type of asset versus primary asset are called derivative assets. These are securities that derive their value from an underlying security or asset. Yeah, what? They're not the asset? No, they're something that points to the asset. I'm thinking about buying this thing, and so I'm going to buy a security that allows me to buy it later on. So these things are incredibly dangerous, folks. You might have heard of options and futures. The real term is options contracts and futures contracts, but try saying that 3 times fast. And some in the industry, yours truly, do not classify these things as investments. I consider them what we call speculations. And when you hear the term speculation or speculating in our class, you just swap it out for gambling. Okay? I'm not a speculator, and I hope you won't be too, but you might do well. The cool thing about derivatives is you can make 100% in one day. The not so cool thing about derivatives is the next day you can lose it all. Yeah, wonderful. But all you have to know for this chapter, for this class right now, is that derivative assets derive their value from an underlying asset. And the 2 major types are options and futures. That's all you have to know for now. Later on, at the very end of the semester, we'll delve into these things, and hopefully I will convince you to stay far, far away from them. Now, investments can also be categorized into what are called direct investments or indirect investments. A direct investment is your name is on the investment. You're in control of the investment. You can buy and sell it as you wish. And examples of this are when you buy a rental property or you buy stocks or bonds. Your name is on the registration. Your name's down at the county admin building or the county courthouse or the county or the city hall, and you're in charge of this. The other type of investment are indirect investments. Someone else is in control of the investment. You have limited control or more likely no control over the underlying investment. And the major one that we'll spend quite a bit of time on in this class are mutual funds. Yes, you own the mutual fund, but the mutual fund they decide which investments they're going to make. You're paying them, folks. They're taking a fee for that. The same thing is true for real estate investment trusts, REITs. Don't you love that word, REIT? REIT already. You buy into the real estate investment trust, but the people running the REIT, they decide what real estate properties to buy and sell. And then you might have heard of limited partnerships. Same idea. If you're a limited partner, you really are not involved in the general partnership where the general partners are the ones making the choices of what the partnership is going to invest in. And some people get confused. Well, I'm buying my shares of my mutual fund. Aren't I the owner of the mutual fund? Yeah, you're the owner of the shares, but the mutual fund or the REIT is making the decisions for you what to invest. So direct versus indirect. Slide number 8. Now, here's a little tricky, one of our first tricky little things we have to worry about here. Investments are either domestic, international, or foreign. Or global. I'm sorry, I messed that up. Foreign and international mean the same thing. You'll hear some people say overseas. So domestic or international or global. Wait a minute. Doesn't global international mean the same thing? No, not in the financial world. In the financial world, domestic is a company that's based in the U.S. International, foreign, overseas is a company outside the United States. And global is both domestic and international. So be careful of this subtle distinction, especially when you're looking at mutual funds. You'll see a mutual fund that's global. You see a mutual fund that's international. You might think they invest in the same thing. No, the international fund does not invest typically in anything based in the U.S. But the problem with these things is that the world is a global place. It's as much as some people want to shut out in companies and individuals from our country. No, it's a very small place these days economically, said by a very smart mutual fund manager who happens to have retired. But reported by Forbes, and of course this is a little old, so who knows what's going on now. I have to go call Ford and Toyota. But 65% by value of the parts in the Ford Mustang come from the U.S. and Canada. 90% of the parts in the Toyota Sienna, which happens to be built in Indiana, come from the U.S. and Canada. So, which is a more American car? I mean, how can you get more American than a Ford Mustang? Buy a Toyota Sienna. Yeah, the younger people don't seem to be as upset about this, unless they've drinking the MAGA Kool-Aid. They understand that the world is global. Older people tend to be more, worried about this. Feel like the United States is slipping, which is not true. Maybe now we're slipping because we're getting rid of all our workers, getting rid of many of our workers, but and turning into a police state. But no, this is not an issue. This is, in my humble opinion, because the world is global. We, 50, 60, 70 years ago, we say, you foreigners, why can't you be more like us? Why can't you be more entrepreneurial and build your economies and do great things with technology? And now we're saying, how come you're trying to be more like us? Yeah, it's sad. We're 4% of the world's population, and we think we're 60, 70% of the world's population. But it might sound touchy-feely or anything, but no, I want to make money. And the way to make money is to think globally, in my humble opinion. Slide number 9. Take a look at some of these companies. You should know most of them. You've heard of most of them. Which do you think are domestic and which do you think are foreign? Now, in the face-to-face class, we ask people to yell out which one they think are which one. Budweiser. Come on, Mother Bud. How can you get more American than Mother Bud? No, it's actually owned by a Belgian-Brazilian consortium. That was a big deal when Budweiser was bought. Yeah, there was a lot of gnashing of teeth and beating of breasts. Shell Oil, it's actually called Royal Dutch Petroleum, and they're based in the UK and the Netherlands at the same time. Ben & Jerry's is now owned by the UK, but I think they just sold it off. I gotta go check that. I think they sold off Ben & Jerry's to a United States company, so maybe I should change this. Farmers Insurance is actually owned by a Swiss company. Arco is owned by BP, British Petroleum. Gerber is owned by a Swiss company, Nestle. Firestone is actually owned by Bridgestone. Japan Cup of Soup is UK. Fox News. Now, Fox News, come on! This is all-American propaganda. I mean, I'm all-American news station. They don't even call themselves a news station. They're owned by an Australian company. Seagram's used to be pure Canadian, but now it's been broken up and owned by various places. Bayer is Germany. Vaseline is UK. Friskies is, again, Swiss. Nestle. Trader Joe's is owned by a German company called Aldi's. 7-Eleven, now there's a real interesting story. 7-Eleven started in the South. It used to be called the Southland Corporation, and it started in Texas. Yeah, right. And then they, went across the country, and then they went into Japan, and it was a separate company. You could invest it separately, and it turns out the Japanese love small stores. We love big stores. We like Costco and Walmart. But no, they love small stores. And you go into a 7-Eleven in Japan and you can buy everything. I mean, it's just amazing. And so they got so big, they turned around and bought the United States 7-Eleven. And now they're making a big push into Mexico. Yeah, if you've been down to Mexico, you see a lot of 7-Elevens. Because the Mexicans love Oxxos, which is actually owned by Coca-Cola. But the Mexican Coca-Cola, FEMSA it's called. FEMSA, it's not the United States Coca-Cola. But guess what? 7-Eleven is now fending off a takeover from a company that's based in Canada, the Circle K company. I forget the name of the company itself, but you've seen Circle K's. So the world is global. Now, what about Volvo and Saab, right? Come on. I mean, obviously, these are foreign. No, actually, for 20 years, they were domestic. Volvo was owned by Ford. Saab was owned by GM, but now they're foreign again. Saab is basically gone, the car company. I forget who bought them, but Saab's, there's a lot more to Saab than just the car companies, and that's still around. They make really good jet fighters. And Volvo's owned by Geely or Geely. It's a Chinese company. Yeah, I know. Now, does this upset you? Does this make you upset? I hope not, because there's only one world, folks. And as much as we like to scream and holler at one another and wave our rockets and other weapons of mass destruction, we only got one world. You think we're going to be able to move to and colonize Mars? Well, maybe in 100, 200 years or so, but we got to deal with issues here. I know it might sound touchy-feely, but I want to make business. I want to make money. And the way to make money is to grow the global economy so that everybody has clothing, food, shelter, internet access, right? Those are the four main things you need in life. It sounds like an advertisement. My apologies, but it's my story. I'm sticking with it. So let's take a look at the returns over the past 50 years or so. Actually, it's a little out of date, and I got to find... I'm not very good with data mining. I need to find somebody who's much better at it. But here are the top countries according to the per capita income in alphabetical order. Which country had the best average annual return over the past 50 years? I think until 2022 or 2021. Sweden, Denmark, the Netherlands. Wait a minute! Those are socialist countries with free health care and education. Oh, well, yeah, they're also very, very, very capitalistic too. I mean, they believe in the capitalist system also for education. Look at the United States. Now, the United States is not a slouch, 10.7%, but you would have done 3 percentage points better by investing in the Swedish stock market. Interesting. And if anybody can find, here's some places I found this data. I gotta keep digging for it because it's a little old now. But still, look at Spain and Austria and Italy. What's going on with them? One of their big problems is their populations are declining. Right. So Japan, it's tough to grow an economy when you have fewer and fewer people, especially when you kick them out after they've been producing goods and services for 20, 30, 40 years in their life. And now they're going to go to a country that they have no knowledge of, where they are probably going to die in some horrible prison. But hey, that's I didn't vote for it, but some people voted for that. So I know this might sound touchy-feely, liberal stuff. No! I want to make money! I want to invest in the best countries, companies, no matter where they are in the world. So I'm more of a global, I guess, elitist. Would I be considered elitist? No. I just want to make money. Slide 11. Now, let's take a look at the time horizon. Slide 11. Very important, folks. Very important stuff. Before you make an investment, you must know your time horizon. Now, we're going to assume, for most of what we learn here, that we have a long-term perspective. Except when we say, hey, this is short-term stuff. And that's what we're going to deal with at the end of this chapter, short-term investments. But in the financial world, there are 3 categories: short-term investments, intermediate-term investments, and long-term investments. If you've taken accounting, you know that they only have 2. They have what's called current, which is short-term up to a year, and then anything more than a year is long-term. No. Put that out of your head if you've taken accounting. Here, the general guidelines are short-term is up to a year or so, intermediate term 2, 3, 4, 5 years, and long-term 5 or more years. Now, I tend to take a little bit longer time frame, 1 to 2 or even 3 years for short term, depending on how important the money is. 3 to 5, 6 or 7 for intermediate term, and 7, 10, 30 years. Now, this is more what you would see in the life insurance world. You would see these guidelines more in the life insurance. Now, you decide which ones you want to use. In this class, we'll use the most popular ones, and that's up to a year for, or so, sometimes you'll say or so, for short-term investments, 2, 3, 4, 5 for intermediate term, and 5 or more for long-term investments. Before you make an investment, you must know the time horizon. And then slide number 12, liquid versus illiquid investments. It's kind of a silly term, enough beer for the weekend. No, not that. No. Liquid investments are easily and quickly converted into cash. There's a ready market to purchase the investment. Change of ownership happens quickly. Now, these are stocks, bonds, mutual funds, real estate investment trusts. You go online, you don't even talk to a broker anymore. You go online and you click, boom, you've sold your shares or bought shares. Illiquid investments are investments where it may be difficult to convert into cash or it takes time. The market for the investment is slow, is small, or the change of ownership happens slowly, or both, and the poster child for illiquid investment is real estate. It takes a few months to sell a property, usually. Sometimes not, but sometimes a lot longer. Sometimes partnerships. It's easy to get into the partnership, but sometimes you have a hard time finding somebody who'll buy your shares. And then collectibles. This is a serious issue. You go online and this guy says, "Oh, this baseball card is worth $900." Yeah, great. And then when you go to actually sell it to him, he'll say, "Well, I'll give you $400 for it." Wait a minute. Yeah, you have to find somebody else who's not a dealer who's looking to buy that same baseball card. So illiquid and liquid investments. And then finally, the most important aspect that we must consider whenever we look at an investment is the risk versus return profile. Risk is the chance that actual investment returns will differ from the expected returns. Now, wait a minute. That's not the way we normally think of risk, is it? We think of risk as the possibility of suffering harm or loss or danger, but not in the investment world. In the investment world, we look at risk as the chance, the probability that what we get from our investment will differ from what we expected. And in general, and we're going to spend a whole presentation on this, folks, in the third presentation of Chapter 1, probably the most important presentation all semester long. In general, the higher the expectation of investment returns, the higher the risk level. You can't get away from it, folks. Do you want to eat well or do you want to sleep well? Yeah. Low risk, anything left 3-4% or so, less than that. Sometimes in the past, those have been more riskier, but now like 2 to 3, 4, 5%. Moderate risk, 4, 5, 6, 7, 8%. 8% is getting up there. Once you get to 8, 9, 10%, you're in high risk territory. Anything greater than 12%, folks, is speculative, and I don't consider it investing. I consider that speculating, which is a fancy word for gambling. Now you'll see other risk return spectrum amounts, returns, percentages, and so you decide which ones you want. But for this class, low risk, 2, 3, 4%. Moderate, 4, 5, 6, 7%. 7%, you're getting up there. But at 8, 9, 10%, you're in the higher risks category. When people ask me, what can we reasonably expect from stocks? I usually tell them 8, 9, 10%. Although we're going to see that some stocks have done a whole lot better. But some stocks have done a whole lot worse. Okay. So finally, now, was this information that difficult? No, there's a lot of it, dear students. Go back, study, get that study guide, flashcards, however you study. Some people use those highlighters. I don't think they're very useful. You have to write the word down. That's why we gave you that study guide to write, and I like flashcards, and you decide. But now we're going to put it into practice. Slide number 14. Let's try some examples. What type of investment is a Bank of America savings account? Security or property? It's a security, right? Exactly. And is it debt or equity? It's debt, right? So it's a financial investment, and we are lending our money to Bank of America, right? Direct or indirect? Well, typically this will be direct, unless it happens to be in a trust that somebody else is managing on your behalf. You're in charge of the savings account. Is it domestic or foreign? Well, Bank of America is domestic. It used to be based, believe it or not, in San Francisco. Now it's in North Carolina. Short, intermediate term, or long term? Well, some people put money in the savings account for the long term. What we hope to impress upon you is that's not the best place to put your money if you're going to leave it there for the long term. Savings accounts should be considered short-term investments, maybe intermediate term, in my humble opinion. Is it low, moderate, or high risk? Very low, right? A bank, a credit union, those, as we'll see when we get to short-term investments at the end of this chapter, they are guaranteed by the full faith and credit of the federal government through what are called the Federal Deposit Insurance Corporation and the National Credit Union Association. I forget the exact name, but these are insurance companies that are run by the government. So if they run out of money, the government's got their back. So very low risk. Is it liquid or illiquid? Well, a savings account is very liquid, but believe it or not, if you say you walk into the bank and they say, okay, I want my $77,000 today. Well, I'll say we'll issue a cashier's check, and you say no, I want it in cash. And they'll say, come back tomorrow. Because they don't have that much money sitting in the bank. There's $200,000 in the ATM next door. That shows you how secure they believe the ATMs are. But no. Then they're gonna have to get the cash. They're gonna have to have cash sent to them, and then they're gonna call the FBI and say we have a suspicious transaction here. Somebody's taking out $77,000. It's not illegal, but yeah, that's the Patriot Act. What about Nestle Foods, the largest food company in the world? Is it a security or property? It's a security. It's a stock. It's a corporation. Debt or equity? It's equity. You're part owner. Direct or indirect, again, assuming it's your account, unless it's a trust where you're the beneficiary, it's a direct investment. Domestic or foreign, it's a foreign company. But really, folks, Nestle and companies like Nestle have often been described as companies which are countries all to themselves. Nestle is a very large company and is everywhere you go in the world. You'll see Nestle foods. Short term, intermediate term, or long term. Well, in general, folks, we're going to impress upon you that stocks should be considered long-term investments. You want to hold your stock for the long term. It's a business, right? But some people treat stocks like pieces of paper that they trade with one another, and for them they're short term. But in our case, we want to think of stocks as long term. Now, Nestle, since it's such a huge company, I guess we could think of it as intermediate, but hold it for 3 years or so. Low, moderate, or high risk. Well, stocks in general are considered high risk. Yes, tomorrow they could drop 20%. They've done it before. They'll do it again. But Nestle, moderate, okay, yeah. Liquid or illiquid? Very liquid. Somebody wants your 100 shares of Nestle. You could sell them today. You go call up your broker, go online, yes. Now, what about Southwestern College proposition, these bonds that we use to build the stadium and destroy all the beautiful old buildings and build these new ugly buildings? These are bonds. And we went to the voters and we said, hey, we're Southwestern College and we want to build that stadium. Now, the stadium is beautiful, but the other buildings, ugh. We didn't hold a bake sale, right? No. And the voters said, okay. So are they securities or properties? The bonds themselves, the loans, think of them like mortgages. They are securities. You can buy them and sell them on the open market. Are they debt or equity? They are debt. We are lending our money to Southwestern Community College, and in exchange, they're going to pay us back interest and promise to repay the loan. Direct or indirect? Direct, assuming you have an account with your name on it, unless it's, as I said, it's in a trust and you're the beneficiary and you don't have it's indirect there. Domestic or somebody else is watching over the trust. The trustee is watching over the trust. Domestic or foreign? Yes, some people do call us Tijuana Tech, although there is an Instituto Tecnológico de Tijuana. We are still based in Chula Vista, so we're domestic. Short term, intermediate term, or long term? Well, many people buy bonds for the long term, but they're also decent short, intermediate term investments, and there is a way for bonds to be short term, but most people don't buy them for the short term. Most people buy them for the longer term, for the interest that they produce. Low, moderate, or high risk? We're fairly low moderate, assuming that the property values in the Southwestern College Community District, that's South Bay up to Coronado, don't collapse. Because how are the bonds paid? They're paid by taxes on the property taxes on the properties in the South Bay, in the Southwestern Community College District. So it's fairly low. Liquid or illiquid? Bonds are usually very liquid. Somebody will buy them. The problem with bonds is most people don't sell them. They buy their bonds and hold on to them. So sometimes it's hard to find somebody who wants to sell their bonds. But if you own the bonds, yeah, you can sell them pretty quickly. Now, what about a duplex in Spring Valley where you rent one and live in the other? Well, for those of you who aren't familiar with San Diego, that's a suburb outside of the main city in a very beautiful rural area, Spring Valley. It's security or property? This is property, real assets, real estate, hard assets. Is it debt or equity? It's an equity position. We're the owner. Direct or indirect? Typically direct. Your name is on the registration. Your name is on the property title in the county admin building. Domestic, it's based here in the United States. Short term, intermediate term, or long term. My humble opinion, real estate should be considered long term. Some people treat, you heard of flippers, I think it's ridiculous, but that's good luck to them. Yeah, you want to own real estate for the long term. Low, moderate, or high risk? Depending on the price you pay, it's usually moderate risk. If you pay a very low price, such as what happened in 2008, 9, 10, 11, then the risk is actually pretty low. because it's not like San Diego area is becoming less desirable to live in. If you pay an outrageous price, which is some of the prices now, then the risk is kind of high because, if there's a downturn, if people lose their jobs, your renter stops paying, things can go from bad to worse. But let's consider them fairly moderate risk. Liquid or illiquid? Well, typically real estate is an illiquid investment. Takes a few months. Sometimes in our history, you put the for sale sign or put it on the listing Thursday. By Saturday, you have 10, 20, 30, 40. 40 offers. Yeah, and by Sunday, you've written the sales agreement. That's not typical, folks. But yes, typically real estate is illiquid. Now, what about Qualcomm? And it's supposed to be all uppercase, but I have a hard time writing it that way. It's one of the largest employers in the San Diego area, but they're a global entity. They make chips. No, they don't. Actually, they don't. They design chips. They sell the chips, but somebody else makes them. And they also were responsible for CDMA, which is one of the two major systems that power cell phones. I think it stood for can't do much of anything. No, I'm sorry, code division multiple access. But they've gone way far, they've evolved quite a bit since then. But their life now is a chip maker, and they're doing fairly well. Security or property? They're a stock. They're a security. Debt or equity? You're part owner when you buy 10 shares or whatever, 5 shares or 100 shares. Direct or indirect? Assuming it's your account, it's direct. Domestic or foreign? Well, it's based here in San Diego. That's where they get their mail. But they do more business outside the United States than they do inside the United States. So the world is global, right? Short term, intermediate term, or long term. Typically stocks, we want to think of the long term. But when you get into these tech companies where the world is changing every 6 months drastically, you might want to think, well, maybe I'm going to hold this for the intermediate term. At least I'm going to be watching it like a hawk. Unlike other stocks, well, we're going to learn how to monitor stocks as we go through the semester. Low, moderate, or high risk? Yeah, high-tech companies are usually high-risk companies. And liquid or illiquid? Yes, very liquid. Somebody's going to buy your 10 shares of Qualcomm, so you don't have to worry about selling them. Now, the last one. A loan to Uncle Harry. Every family has an Uncle Harry. Tio Lucas, yeah, no good. Security or property? It's a security. It's debt. You're lending him money in the hope that he's going to pay you back. Direct or indirect? Direct. You're in charge. Domestic or foreign? Well, he's still here in San Diego until he sends a postcard from somewhere foreign. Short term, intermediate term, long term, or kind of like infinity term? You're going to get your money back? We don't know. Low, moderate, or high risk? Yeah, speculative high risk, Uncle Harry. And liquid or illiquid? Yeah, nobody's going to want to buy your loan from you so that Uncle Harry owes them. Maybe his ex-wife. Who knows? Anyway, hopefully you now will take a look at different types of investments and be able to piece out the major characteristics, the major attributes. Well, don't worry. All you need to know for Chapter 1 is what's in Chapter 1. We're going to peel away the onion of each of these major categories, stocks, bonds, mutual funds, and the like, and deal a little bit with real estate. But we hope you've seen that this material intellectually is fairly straightforward. There's a lot of it, folks, so there's a lot of studying you got to do. There's no substitute for time on task. But we hope you're going to find that the investment world is fairly straightforward. As Warren Buffett likes to say, investing is simple, but it ain't easy. We're dealing with the simple part. We're dealing with the intellectual part. The ain't easy part is when our emotions kick in. Indeed. And so we're going to learn some techniques to help us deal with those emotional issues. Are you excited? I hope so. Again, thank you so much for being in our class. All of us are incredible. All of us at Southwestern, incredibly proud and honored that you're here with us, especially me. I feel I'm the luckiest guy in the world to be able to teach this information to you. And our journey is just beginning. But I promise you, by the end of our journey together, you will have a strong foundation. And in the discussion forum, introduce yourself. I'll reiterate this. You will have a strong basis, a strong foundation in the most popular, the most important investment alternatives. And I firmly believe, that assuming the world doesn't end, which, never know that could happen, the next 20, 30, 40 years are going to be the most prosperous years in the history of the world. Because the last 200 years, the last 100 years, the last 50 years, the last 20 years have been prosperous beyond our imagination. I mean, think about somebody from the 1840s were to wake up today. Unbelievable, just unbelievable. Our standard of living. And if you don't believe me, read an historical novel from the 1840s. They didn't have toilets, folks. They had to go walk the privy. Yes. So let's be very happy. My humble opinion is I'm incredibly honored that you're with us, and we'll see you at our next presentation when we now focus a little more carefully, a little more closely on the major investment alternatives in our presentation described, titled The Overview of the Investment Universe. Thank you again for being in our class.